Hello traders, it is Friday, May 3rd. This complete video is going to be dedicated to OneOP. We use it to help time our entries and exits during the course of the day. It's an indicator that I developed. It took me over 10 years to develop this. Before I get into this any further, you need to know there is nothing like this. This is not a derivative of any other indicator, period. Most other indicators are derived from one another. This is not that at all. And you're going to see it do some really wacky things. Most of the time, it's going to be dead on. It is predictive and it is not reactive like every other indicator. That's the problem with every other indicator, is it lags. By the time it generates a buy or a sell signal, the move is already exhausted. Plus, when you're in a trade and you're trying to decide, should I add to the position? Should I be taking profits here? The fact that the indicator is starting to get close to a signal tells you to be very, very cautious and to watch for a possible reversal. So a lot of you like trading ES and NQ. Perfect. This is designed for those two instruments on a 5-minute basis. We use QQQ for NQ, and we use SPY for ES. Those are going to move in tandem with the futures, so you don't need to have those futures quotes. If you come to take the trial, www.oneoption.com, spell it all out, and then you'll click Start Here. That'll get you through the trial process once you're registered with the website. It's a free trial, by the way, to access everything that I offer, including my educational content, which I think that's going to help a lot of you out. I'm going to go to the dashboard. This is your hub. This is where you find everything in the system. This is my course. You can scroll down. Market First is the first section. Get into long-term market technicals. Good for you to read. As you continue to scroll down, you're going to see some short-term technicals as well. Please read those articles. If you're not real familiar with how to read price action, you'll want to read some of these. The tells from the first hour of trading, your game plan after the first hour of trading, trading flat opens and inside days, day trading the OneOP indicator. If you want to know how to trade this indicator, that is the article to read in depth. I also have a lot of videos on this topic as well, and you'll see those in the tutorial section. You can check out Option Stalker, which is our web-based platform. So I just clicked on Option Stalker from the dashboard. Since you're interested in SPY, click the 5-minute time frame. There is your 5-minute SPY chart. At the bottom, you'll notice this dotted blue line and this red line. When the red line crosses the blue dotted line out of a deep trough like this, it is a buy signal. When you get a cross above zero, where the red line comes below the blue line, that is a sell right in here. Now you've got a bullish cross right in here. So that's how the indicator works. You do have to have some price reading skills. You've got to be able to learn to read price action. Those articles are going to help you dramatically. So what I'd like to do is, this is a cheaper version for those of you who just want to use OneOP and just trade ES and NQ. A subscription to Option Stalker is considerably less expensive than getting a subscription to Option Stalker Pro. Option Stalker Pro is our desktop version. That's what I use every day. That's what I'm going to use for the rest of this video. But you can see there's the OneOP indicator. These arrows, sell arrow, buy arrow, ignore them. They are not related to OneOP. It's a different trading system. Works really well for stock, but I'm not going to get into that right now. I'm just going to talk about the OneOP indicator. So let's take this screen down and I'm going to show you Option Stalker Pro. We're also going to be using a live data feed if you have an account with Interactive Brokers, you can put in the symbol and you'll be able to bring up the ES futures or the NQ futures if you have that data with them. You can also just use SPY and QQQ. It works great. Trust me on this. So let's just go back. I don't know. Let's scroll back. A week, 2 weeks, I don't know. I don't have that much time, so I'm just going to go back a week. And all I'm going to do, I'm just randomly scrolling back. All right, so here we've got a setup right in here. So we come in. This is a 5-minute chart. This is the day. There's your bullish cross right there. You can see right out of this trough here. So you're looking for price confirmation. What does that mean? Well, for me, if I can get through the top of this long red candle here, that would tell me that those sellers who drove the price down there are gone. And now you can see how, yes, we have price confirmation and we're above VWAP, the blue line. This would be a good entry point off of that signal. Continue to ride it higher. Oh, as we're going higher and higher, I see mixed overlapping candles. Not the strongest of rallies. Plus, we're bumping up against resistance on that April 17th high of the day. I can start to expect some resistance here. Ah, I have the red line below the blue line. That is saying there's a sell signal pending. There's no other indicator when the market is still going up that's going to tell you that a short is setting up. There's not freaking one. And I have people all the time telling me, I think I figured out OneOp. It correlates really well with a linear regression of volume. There's nothing out there. You don't have the data. I have the data, and I have many different types of data and variables that went into the calculation of this indicator. And it has divergences. A moving average doesn't have a divergence. It's a lagging indicator. VWAP lags. So when the market is going down, it's going to go down. You'll never see it do anything opposite to what the market is doing. But there will be times when OneOp will actually move opposite to the market. What other indicator do you know of that does that? There is none. So if you think you figured it out, go find an indicator that correlates with it all the time. You will not find one. Well, what makes it tick? I'm not going to tell you that. Why would I tell you that? I've spent 10 years building it. I'm letting you use it and trade off of it. So we get this bearish cross right here. We have a long bearish engulfing candle. That is an excellent short. Right in here. Hey, there's a buy signal forming. This is not where you want to be buying because you don't have price confirmation. You would at minimum need to get back through the open of this long red candle. Never happens. So you're going to let this buy signal pass you by, and in fact, the rest of the day, we just kind of chop around with mixed overlapping candles. And you can see how choppy OneOp is. You really want these big spikes and these nice, crisp, clean crosses like this. So that's how it finished the rest of the day. We open up. There's nothing really going on. There's VWAP. Oh, we got a nice long red candle. And there is a bearish cross right here. So we have confirmation. We're through the prior day's low. This is a decent little sell signal. So are you going to be buying just because OneOp crossed here? No, you're not. You can see that there's some decent price action on the way down. So you get a little bit of a bounce in here. Okay, you get a little bit of a bearish cross. There's really nothing in here to tell you that much is going on. And this is also quite choppy price action, but readable for those of you who just trade off of price action. No problem. I do that as well. You've got this poke through VWAP and a long bearish engulfing candle. This was a big time head fake, and I can remember it because I remember posting in the chat room. I said, do not bite on this long green candle. We need to see it hold, and then we need follow through. The programs know that you guys are excited to buy a breakout above VWAP and you want to buy this bounce, and so they give you a nice move through it and then they slam the door in your face. So there's a nice little bearish cross in here. 1OP crosses back down and that doesn't do much at the close of the day. So we gap up, gap up. This is not something we want to chase. Most gaps are tested, many of them reverse. We had seen heavy selling pressure throughout the course of April. Why would you buy a gap up? You wouldn't. You'd want to make sure that that gap up has held. And you're in a bearish 1OP cycle, so if anything, you're looking for a short. And there you've got a new low of the day. I'm not counting the tails here. Yeah, this would be a good little short. You're below VWAP. You've got your little pullback. You almost fill the gap. And you can see 1OP is telling you this is going to bounce. Did 1OP signal a buy signal? Here? 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 No! It did it right flipping here. So it does tend to be early. That's the whole beauty of it, is that it is early and it is predictive. You're going to see some of these crosses and you go, holy cow, where did that come from? The fact that it does not correlate with any other indicator should be a positive in your mind, not a negative. And there are people who will look at this and go, it didn't work every time. It doesn't work. It does work. You just have to know how to use the indicator. So you get a beautiful bullish signal right in here. So if you are short, you know you're on borrowed time. You should be looking to take profits. Get this nice little bounce and we get follow through. Get this red candle where they try and drive price down to test the low of the day, and it is immediately reversed with a nice breakout above VWAP. And there she goes. Now, you're riding this trade and riding this trade, and 1OP is starting to crest up in here. It crests, you got a red bearish engulfing candle at the high of the day. What did 1OP do? Already crossing, telling you, danger, danger, danger. There's a short setting up. Beautiful short. 502.50 down to, that was a 30-point move. Okay? Gap up. Gap up. Pete told me. Market's been selling off recently. We do not want to chase a gap up. We want to wait for price confirmation. So we get a red candle and pretty much bullish engulfing candle. Yeah, looks good. We got 1OP crossing in here. That's bullish too. Now we're through the prior day's high with a long green candle. Heck yeah, could definitely get long in here. Here, you've got 1OP cresting. Use caution. We've got a long red bearish engulfing candle. I would personally be careful here, okay? I wouldn't bail on the position. Get another test up in here. Take your gains on the long, and there's your bearish cross right here. Pete, you had a bearish cross, but the market did go down. The market went up. This indicator doesn't work. Okay, whatever. You can see, market does not go up for a while. Now you've got your bullish cross right in here. It's below zero. Got a bullish cross. You have an entry point in here. The market ran out of gas. Typically, what you're going to get, and you'll be able to read this in the articles as well, when you have a gap up and a gap and go, which this was a gap and go, typically the market's going to make the majority of its move in about the first 90 minutes. And then you're going to trade in a fairly compressed trading range the rest of the day, which is what happened. And when you start seeing tiny bodied candles like this, you know there's not a lot going on. price action very, very compressed. I don't care what indicator you use. When the market is sideways, it's not going to generate good signals. So let's keep moving on. I told you I'm just going to go through a whole lot of days. In this particular instance, I don't read a lot into OneOp, and here you've got a day when it was just choppy and chunky and there's not a lot going on. You do get somewhat of a cross right in here, and you can see overlapping candles here. Yes, you drifted below VWAP. I mean, there's nothing. This isn't a bearish cycle. So you had your bearish cross up here and you're continuing to waffle around below the zero line. So this is all still relatively bearish. But as far as just trading off of what the indicator is telling you, nah, there's not a lot in here to excite me. Now you get the open of this long red candle breach to the upside with two nice long green candles and follow through. Yes, this is on a bullish cross. I could trade this. Starting to get back to zero. Starting to see a bearish cross right in here. Warning. Okay? Warning. Right here. Not here. Not here. Not here. Right flipping here. It's telling you to start watching for a reversal. Bearish engulfing candle. Takes out 3 green candles. Okie dokie. I can get behind that. Nice drop below VWAP. Close of the day. You're not seeing much in the last 30 minutes of trading. So that's how it worked for that particular day. I'm not cherry picking. I just went back, I think, about 3 weeks. Bullish cross on the open, gap down, gap reversals are our best trading scenario because if the gap starts to fill, then we have the greatest potential for upside. So here it's telling you to watch for signs of support. So you get a little bit of a pop in here. Could you have traded this? Yeah, maybe. Maybe you'd want to wait a little bit more for confirmation after a big drop like that. I certainly would want to wait. Here you've got a little bearish cycle. All right, well, let's see what it produces. You had a big gap down, for crying out loud. This could have been just a little head fake. You're above the high of the day. You're in the gap. This is going to lure in a lot of dip buyers. So let's make sure that this bearish cycle runs its course. And let's not be fooled into buying or shorting here. So you get a little bit of a pullback on this bearish cycle. And here is a nice bullish cross. And you have a higher low, double bottom. And you're starting to see some green candles stack. Now you're through that prior day's high during a bullish cycle. Yeehaw! Keep riding this thing higher. Okay, well, Pete, I've got a bearish cross here. Should I be careful? Should I be careful? Yes, you want this close of this long green candle to be preserved. You don't want to see this given back. You certainly don't want to go through the open of that long green candle. So it is preserved. Get a little tiny pullback in here. Still no reason to get short. You're waiting to see if you make a double top in here. Oh no, we don't. All right. Stay the course. Now you've got nice follow through. Now you're starting to get a little bit toppy in here. You already know that you've got this bearish cross in there. Now you're crossing again in here. So yeah, this would be a good place to take gains. Got 1, 2, 3, 4, 5, 6 candles. Can't get further into the gap. We need that follow through. We know the market gap down. We know there are sellers. So you start compressing, no follow through. Yeah, get out. You don't have to short here, but at least get out of your long position. See if you get a pullback, see if you get a better entry point. So market comes down. You've got this compression right here. You've got a bullish cross. Late in the day, if you wanted to, you could have tried to trade that. You would have made some money on it. But that late in the day, I'm typically not trading a lot in the last hour. That's just me personally. So here, get a nice bullish cross. You get a gap and go. I don't often chase gap and goes too much downside risk. I described that in my articles. All right, so we get up near the high of the day here, and we start to see a bearish 1OP cross. All right, if I did have long positions in stock or in futures, whatever, this is where I probably want to start taking some gains. We had a little gap and go here. I mentioned to you earlier that most gap and goes, they're going to run their course in 90 minutes, and you're still going to be waiting for confirmation of that gap and go before you can get long, because you are very much afraid of a gap reversal. And you should be, because there's a lot of downside risk to those. So by the time you get confirmation that this is a gap and go, most of the move's already done. So I hate gap and goes. Hate that formation. Fortunately, the market usually, when it gaps up, tests the bid. When it gaps down, is going to test the ask. So you'll have some retracement into the gap. How far you retrace into that gap is going to be very telling. Cover all this in the educational article, so you'll also have access to that during the trial. So the market pulls back. You get a bullish cross right in here, bounces off of VWAP. You get a nice little move higher. Got a nice little cross in here below zero, so you can confirm in here, but these are tiny bodied candles in a gap and go formation. Not a lot to trade off of there. Gap up, there's your gap test right in there. Long green candle, long red candle, okay. Get a nice bullish cross right in there. Market runs up, lower high, double top, a little bearish cross right in here. Okay, nothing really going on. I mean, you do get a bullish cross right in here. I'll expand this. When it's this tight, I prefer to trade these nice big moves like this with big clean moves like that and like that. It sets up much better. When you get a little of this choppy back and forth, it is a sign of relative indecision in the market, but you do have a bullish cross in here. So you got a bullish engulfing candle that gets through the high, through the open of that red candle. So, okay, yeah, I could probably try some longs in here. So it rallies up, you get above VWAP, and then you start having these tiny bodied candles. Yeah, you'd probably want to take gains in there. But you get a nice bearish cross right here at resistance. Okay. That ends up being a really nice short from $5.10.37. That is easily a 30-point move right there. And now it's saying, hey, you know what? Be watchful. We could get a nice little bounce. There's your bullish cross in here. Whew. Nice stuff. What day are we on anyway? April 30th. Good. We're getting close to the end of this video. I'm just trying to show you how effective this indicator is. Market gaps down a little bit, trying to fill the gaps, kind of filling the gap. 1OP is telling you danger, danger, danger. So you get your bearish cross in here, and there's your long red candle to a new low of the day. Okie dokie. I am on high alert. I've got a bearish cross. I have a starter position on here, lower high. I'm adding the position here. Now I've got these stacked red candles, 1OP continuing to go down. Now here is where you need to be able to read price action. This is bearish, okay? We're through the prior day's low. We've got these three nice stacked candles on what? On heavy volume. Hey, this is probably a legitimate move. You have no bounce in here, tiny body candles drifting lower. So even though I've got a bullish 1OP cross right here, I'm not going to be buying in here. I have no price confirmation. At minimum, very minimum, I would need to get above the open of this long red candle right here. And I want half of it preserved if I want to stay short, which it is preserved beautifully. So no, I'm going to stick with the short. Market comes in. I know I'm in a bullish cycle in here. Compress, 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 compress. There is no follow through selling. All right, I might want to take gains on my futures position, take gains on my shorts, see if I can get a little bit of a rally out of this, and then look for a better entry point. Lo and behold, the open of this long red candle is preserved. VWAP is preserved. I get this little bounce right in here. I get a bearish engulfing candle right here. Ding, 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 ding. 1OP made it back to zero, just barely, but it did. And now I have a bearish cross. Thank you very much. Did I get the bearish cross here? Did I get it here? Well, that's where most other indicators are going to give you that signal. Heck no, I got it right flipping here. Okay, early, early, early. Gap down, right here. All right, it's saying, hey, you know what? You should be taking gains on short positions here. Tiny bodied candles, mixed candles, can't get any follow through here. All right, got nothing going on. A little bit of a bounce in here, but there's another thing that you would learn from my articles. This is a low probability trading environment. Why? Because the FOMC statement is coming out at 1 o'clock Central, 2 o'clock Eastern. So traders are not doing anything. So you would not buy here unless you were super, super bored, which is never a good reason to trade. So we go kind of sideways in here. And then the FOMC statement comes out and we have a bullish cross right in here. Okie dokie, let's make 503, let's make 40 S&P points. Wicks, 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 wicks. Those are a sign of resistance. That is selling pressure. Hey, look at this. We've got a bearish 1OP cross. I'm going to be looking for signs of resistance. As soon as we start taking out the open of this last long green candle right here, hello. Now we did have a bullish hammer. We started to, at the start of this candle right here, it looked really bearish because it was long and red and it finished as a bullish hammer. Ooh, okay, well that's a sign that buyers are in there supporting it. So you do want to wait until these candles finish. But you had a nice opportunity, especially when this candle finished red, to short 504, easily down to 500. You had 40 S&P points in there, easy. You did not, after the FOMC, need to lunge on that candle and short right away. Even though you had your bearish 1OP cross, you should have waited for this one to complete and to close before you made a decision that, yes, we have closed below this long green candle. Well, when we closed, we also closed below the midpoint of this long green candle, which, by the way, I've got my candles configured so that when there's a heavy volume bar like this, it's shaded fluorescent green. Pink, like this, would be heavy volume as well. But we've broken through the halfway point there, closed below it. Heck yeah, that's a really good short in there. Where did 1OP give me this signal? Here? 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 No, that's where most indicators are going to tell you to look for a short. Way up in here. Predictive, not reactive. This big drop here. Okay, 1OP is saying, hey, this is going to be a good entry point for longs. Get above the open of this long red candle. All right, I can get long in here. There was an opportunity to make some money. All right, now it's saying, yeah, there's a good short setting up in here. Really not much of anything. All right, we're waffling around. I got a bullish cross. Now I'm going to watch to see what happens during this bullish cross. And I need to see a breakout through this resistance level right here. Oh, I have it right here. Now, am I worried because 1OP is starting to get a little overextended and it might cross down? No, because I have price confirmation that the market is heading higher. Oh, there we got a bearish engulfing candle, but it doesn't materialize into anything much. So I'm not shorting, I'm just hanging on to my long, and I'm trading this cycle, and I'm going to use that as my stop. Now that I've got some profit built into it, I want to see the top of this long green candle preserved, and it is. So now we get continuation, and this is where you can see. So this indicator, and this is what we call a divergence, I'm glad I had one. The indicator is going down, down, down. The market should be going down, 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 right? It's not going down. Every other indicator, SMI, MACD, whatever the heck you use, it's going to be going up because it is following the market. Okay, that's all it's based on, is the market. That's not what OneOP is. It has completely different variables. So go find an indicator that did this, that went down when the market was actually compressing. When we get these divergences, this is actually a sign that the trend is very, very strong, because normally the market would go down, and when it doesn't, it tells us that it is coiling right here and that this cross is going to be a really good one. And it was. Boom, gone. There you got a bearish cross, bearish engulfing candle. All right, watching this support, this compression near the high. Oh, there we go, long red candle. There's a good little short setting up. And today is May 3rd, and we are into the jobs report. So, big gap up. By the way, does this bullish cross before the close yesterday tell me that I should hold longs overnight? I wouldn't do that. I use this for day trading, okay? That's how it's intended to be used. Wait for the information, trade it the next day, wait the first 30 to 45 minutes, get your market bearings, then trade it. Here is your bearish cross. Okay, so we've got a bearish cycle. We are in the gap, and you can see how we're staying below VWAP. Yeah, there's been a chance to get short in here. This is live, okay? What would I be doing? How would I be trading this? Yeah, I've got this bearish cycle, and yeah, I can see the market starting to give back some of its gains here. It popped up against the 50-day moving average earlier today, which, by the way, you dang well better know where these D1 resistance levels and support levels come into play. This is AVWAP-Q. I use that. I also use the 50-day moving average. Yeah, you can see there was resistance there. And so when I get this bearish 1OP cross, I am aware of it. And this is a good place to short. And yes, could have probably made 10 points off of that, but this is choppy price action, mixed overlapping candles, long tails, long wicks. We're kind of drifting lower. I'm not seeing much to get excited about here. Are we going to continue to fill in some of this gap? Yeah, I probably got a little bit of gain in my futures position, so why not take the gain and look for better price action, because this is not doing a lot for me. And the market did have a big gap up, and it has been able to hold most of the gains so far. And I might get a little bit of a bullish cross in here. So yeah, I'd be taking gains on my futures positions. 1OP is such a unique indicator. And when you compare it to every other indicator, and I urge you to do that, if you think you figured it out, you have not figured it out, because it does the unexpected. And when these crosses come up, they tend to be early. So you need to be able to read price action, and you need to be watchful for those resistance levels. When we have price confirmation, we are anticipating that there's going to be a reversal, and we are ready to act on it. Then we have our confirmation. That's how 1OP is used. So we don't just simply trade off of the indicator and go, oh, well, there's a bearish signal right here, so I'm going to start shorting here. It's early. okay? As it starts to approach and it starts to crest before it even crosses, you're looking for price compression to tell you that the move is getting exhausted. You're looking for wicks as signs of resistance. You're looking for the actual breakdown below a support level for confirmation price-wise, but you've got your orders loaded and ready because OneOP is telling you when there's a strong move, when you can add to the position. It's also telling you when you should be looking for a compression, when you should be taking your gains on your positions, and then ultimately looking for different reversals. I've got lots of videos on this. I don't talk about OneOP as much as I should. It is the basis for all of our day trading positions in the chat room, but we use stocks as a surrogate market position because there's an edge to it, and that's what I teach. Do I trade OneOP? Do I trade it using futures? Absolutely. I trade the heck out of it. So I hope this tutorial has helped you. You can come in and take the free trial, learn more about the indicator. If you want to use the desktop version, you can. If you think you're going to go with a cheaper plan, get used to what you see in the web-based version and ignore these buy and sell arrows in here. Completely different system. Do not use them at all. Just use OneOP and you'll be in great shape. Thanks so much for watching. Please leave your comments and questions. We'll see you Sunday. I plan on doing a video, so we'll see you then.
Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.